Welcome back, Truth to a T. Please like, subscribe, and share this video, and leave a comment down below. Check the video description for valuable discount links.
What's up everybody, Truth here, and welcome back to the channel. Now, I know a lot of you are interested in building long-term wealth, but might be intimidated by the idea of investing. Trust me, I get it. It can seem like a daunting world out there, especially when you're just starting out. But the truth is, investing is one of the most powerful tools you have for achieving financial freedom. And it doesn't have to be complicated. That's why in this video, we're breaking down the top 10 things every beginner investor needs to know. Whether you're just dipping your toes into the market or looking for a quick refresher, these tips will set you on the right path for success. So, grab your notebooks, let's jump right in. First things first, let's talk about what the stock market actually is. In the simplest terms, the stock market is like a giant marketplace where you can buy and sell pieces of companies, also known as stocks or shares. These companies can range from tech giants like Apple or Tesla to your favorite clothing brands or even restaurant chains. When you buy stock in a company, you're essentially becoming a part owner. Now, the price of a stock fluctuates based on supply and demand. If more people want to buy a stock, the price goes up, and if more people want to sell, the price goes down. It's all about understanding the forces that drive these price movements and learning how to make smart investment decisions based on your analysis and risk tolerance. Before you even think about buying your first stock, you absolutely need to define your investment goals. Ask yourself, why are you investing in the first place? Is it for retirement, a down payment on a house, or maybe you're just trying to grow your wealth over time? Whatever your goal may be, make sure it's specific, measurable, achievable, relevant, and time-bound. Having clear goals will not only guide your investment decisions but also keep you motivated throughout your investing journey. Trust me, there will be ups and downs in the market, but having that clear vision of what you're working towards will help you stay the course and make rational decisions even when things get volatile. You've probably heard the saying, don't put all your eggs in one basket, right? Well, in the investing world, that's the golden rule of diversification. Essentially, it means spreading your money across different asset classes like stocks, bonds, real estate, and even alternative investments. And within each asset class, you want to diversify even further. For example, in stocks, don't just invest in one or two companies even if they seem like sure things. What if something unexpected happens? By diversifying your portfolio, you're minimizing your risk. Number 4. Decoding financial statements. Now this one might sound a little intimidating, but trust me, learning to read and understand basic financial statements is crucial for any investor. Think of it like this. If you were buying a used car, you wouldn't just hand over your hard-earned cash without checking under the hood, right? The same goes for investing in a company. You need to look beyond the stock price and dive into their financial statements to see how the business is actually performing. Start with the basics: the income statement, balance sheet, and cash flow statement. These reports will give you insights into the company's revenue, expenses, assets, liabilities, and overall financial health. Number 5. Starting with index funds. For beginner investors, I almost always recommend starting with low-cost index funds. Think of an index fund like a basket of stocks that tracks a specific market index, like the S&P 500. Instead of trying to pick individual stocks, which can be time-consuming and risky, especially for beginners, index funds offer instant diversification and typically have lower fees compared to actively managed funds. Plus, historically, index funds have a solid track record of delivering competitive returns over the long run. It's a simple, effective, and relatively low-stress way to start investing in the stock market. Number 6. Fees, the silent killer of returns. Listen up, because this is important. Fees matter. They might seem small, especially when you're first starting out, but those seemingly insignificant percentages can eat into your returns over time. Make sure you understand the fees associated with any investment before you hit that buy button. This includes things like expense ratios for mutual funds and ETFs, trading commissions, and even account maintenance fees. Remember, every dollar you save on fees is a dollar that stays invested and working towards your financial goals. The financial markets are constantly evolving, so staying informed about market trends and economic news is crucial for any investor. Now, I'm not saying you need to be glued to your screen 24/7 watching every market fluctuation, but it's essential to stay up to date on major events that could impact your investments. This includes things like interest rate changes, inflation data, geopolitical events, and even industry-specific news related to the companies you're invested in. One of the biggest advantages you have as a young investor is time. The magic of compound growth really kicks in the longer you're invested. Think of it like a snowball effect. As you earn returns on your investments, those returns are reinvested, and then you earn returns on your returns, and so on. Over time, even small contributions can grow into significant wealth. So don't get discouraged if you're not seeing massive gains right away. Focus on consistency, and let the power of compound growth work its magic over the long term. It's inevitable. The market will go up, and the market will go down. There will be times when you're tempted to sell everything in a panic, and there will be times when you're tempted to go all in on a hot stock tip. But here's the thing. Emotional investing is a recipe for disaster. When you let your emotions dictate your investment decisions, you're more likely to make irrational choices that could sabotage your long-term goals. The world of investing is constantly changing, so it's crucial to be a lifelong learner. Whether it's reading books, listening to podcasts, taking online courses, or even just following reputable financial news sources, make it a habit to continuously expand your knowledge and stay ahead of the curve. Investing in your financial education is one of the best investments you can make. There you have it, folks, the top 10 things every beginner investor needs to know. I hope this video gave you the confidence to take that first step towards building your financial future. Remember, investing doesn't have to be complicated. By starting small, staying informed, and focusing on the long term, you can achieve your financial goals and create the life you've always dreamed of. Thanks for watching. If you found this video helpful, make sure to like, subscribe, and hit the notification bell for more investing tips and advice. Happy investing!